This is Nightly Business Report with Tyler Matheson and Susie Guerin. Brought to you by...
Sailing through the heart of historic cities and landscapes on a river, you get close to iconic landmarks, to local life, to cultural treasures. Viking River Cruises, exploring the world in comfort.
Ready or not, the Dow having its worst weekly drop of the year, the S&P at its lowest level in a month. Is this the beginning of a stock market correction or something less dire?
Social sizzlers. And while the market may have cooled off, one sector remains red hot: social media. But can the group keep trending in the eyes of investors? And turmoil in Egypt. Some big American companies are halting operations now in Cairo. And as the violence escalates, it's putting a major defense firm's multi-billion-dollar deal in jeopardy. All that and more tonight on Nightly Business Report for Friday, August 16th. Good evening, everyone. Another milestone on Wall Street today, but not a good one. The Dow posted its worst weekly decline for 2013. And it wasn't only the blue chips struggling. It was a lousy week for most of the major stock indexes. They closed in the red for the second week in a row. What continues to nag investors is conflicting reports about the economy, like today's news. A closely watched consumer sentiment survey fell sharply, but there were some strong numbers from housing, and we'll have more on that in just a moment. So investors played it safe and sold stocks. The Dow lost 30 points, the Nasdaq slipped 3, and the S&P off 5.5 points. Looking at the week, the Dow and S&P tumbled 2%, and the Nasdaq was down by 1.5%. Meanwhile, in the bond market, the yield on the 10-year Treasury note spiked, hitting its highest level in 2 years. So with stocks taking a tumble this week after shooting higher since the start of the year, the big question is this the full-fledged correction that so many on Wall Street have been predicting? Jackie DeAngelis looks at the evidence, pro and con.
The bears have one-upped the bulls this week on Wall Street, leaving most of the 10 S&P large-cap sectors in the red, and the few that aren't are barely positive. This trend raising some eyebrows on Wall Street with the concern that the long-awaited correction may be taking shape. Here's Jeremy Siegel of the Wharton School of Business.
Past August, obviously a 10% correction is certainly in the realm of possibility.
The worst performers, industrials, materials, and financials. The best of the worst include healthcare, the consumer discretionary group, and consumer staples. Many analysts and market observers have been calling for a correction for some time, but haven't been able to get the timing quite right, as the Fed has been able to keep the market momentum moving, and that has the bulls saying that this is just another bump in the road.
But what's happening now is a little different, especially as the yield on the 10-year rises, hitting levels not seen in 2 years. If the Fed backs off its bond buying program and yields continue to rise, it could have a more significant chilling effect on the market, especially on defensive sectors that are more sensitive to moves in interest rates.
McNeil Curry, the head of technical strategy for Bank of America Merrill Lynch, tells me that as rates push higher, so does the anxiety on the street.
Definitely it is the push higher in interest rates is leading to a little bit of increased anxiety in equities and obviously forcing them to correct a bit to the downside.
This leaves a lot of people asking, if the markets are correcting, how big of a move will it be? Only time, of course, will tell. For Nightly Business Report, I'm Jackie DeAngelis.
Home builders broke ground on more new homes in July. The trouble was that increase was mostly on a 20% jump in apartment buildings, while construction of more profitable single-family homes actually fell 2%. Permits for future construction also fell slightly. Shares of some of the nation's biggest builders were mixed today. Pulte and Lennar ended higher, while Ryland, D.R. Horton, and KB Homes closed lower. An update now on Detroit's big bankruptcy. The federal judge presiding over the largest municipal bankruptcy filing in U.S. history has ordered a mediator in the case to handle negotiations of collective bargaining agreements with the city's unions and its two largest pension funds. The idea is to save money on litigation against the city and speed up a resolution of this historic bankruptcy. Turning now to Egypt, another day of violence and bloodshed as the military police continue their assault on supporters of ousted President Mohamed Morsi. From Cairo, Youssef Gamal Adine has more.
A very tense Cairo here tonight as supporters of ousted President Mohamed Morsi continue to clash with security forces, not just here in Cairo, but across the country. It started after the protesters called for a million-man march, a Friday of rage after Friday prayers, and that did materialize in the skirmishes which happened around the Ramsey Square area and also on some of the bridges. A lot of people have been killed. The images we've seen are very disturbing, very bloody images, and also masked gunmen in operation with AK-47s entrenching themselves in battle. Politically, we have developments from the Kingdom of Saudi Arabia, which has positioned itself, surprisingly perhaps to some, with the Egyptian government, saying that they stand with Egypt against terrorism. It's a very rapidly developing story, but that's the update for now. I'm Yusuf Gamedidin for Nightly Business Report in Cairo.
That turmoil in Egypt still driving the price of oil higher, ramping up fears about production and supply disruptions out of the Middle East. Today, crude rose for the 6th straight day, up 13 cents to settle above $107 a barrel.
And the deadly violence in Egypt is forcing some big changes in that country's economy. The Egyptian stock market has been closed now for days, and its central bank has ordered all banks to remain shut during the unrest. Now, some major international firms have halted operations there in response to the unrest, including General Motors, Toyota, Suzuki, Royal Dutch Shell, and the appliance maker Electrolux.
Well, the escalating violence may also impact Lockheed Martin as it tries to figure out what happens next to its multi-billion-dollar fighter jet deal. Jane Wells has that story.
Here is home video from 2011 of Egyptian F-16s flying over Cairo. The jet, nicknamed the Fighting Falcon, is the aerial backbone for many U.S. allies, flown by the U.S. Air Force Thunderbirds before sequestration grounded the team, and a longtime success story for manufacturer Lockheed Martin.
The F-16 is the standard against which every other fighter in the world is judged.
But now Egypt has turned its guns on its own people, and the U.S. is reconsidering whether to supply it with more weapons.
Our traditional cooperation cannot continue as usual when civilians are being killed in the streets.
The Hill is reporting a former Pentagon official believes a billion-dollar deal to sell more F-16s to Egypt may be, quote, dead in the water. The Defense Department tells CNBC, quote, this is a delay in delivery, not a termination. The program is not off.
The Defense Department had already announced a delay of F-16 deliveries in July as the streets of Egypt heated up. But with this week's bloodbath, President Obama canceled a joint military exercise, and Defense Secretary Chuck Hagel warned Egypt's military that it's putting, quote, important elements of our long-standing defense cooperation at risk.
What does it mean to Lockheed? There is some confusion. Lockheed says the sale of 20 planes is worth nearly $800 million, and 14 have been delivered. The Pentagon says only 8 have been delivered and 4 are in limbo, and that the sale is worth twice what Lockheed says. Regardless, for the last 2 quarters, Lockheed has reported a drop in overall F-16 deliveries as business shifts to the F-35. 2 analysts tell CNBC they believe the U.S. government may end up on the hook for the jets if they do not go to Egypt, as all foreign military sales have to be brokered by the Pentagon. Finding another buyer, though, may not be difficult. The only question could be at what price. For Nightly Business Report, I'm Jane Wells.
Coming up, this month has not been kind to the overall market, but there's one sector that would love the dog days of August to go on forever. First, though, a check on today's Dow winners and losers. There's news tonight in the seemingly endless battle to take over Dell. A judge in Delaware ruled against billionaire activist investor Carl Icahn today, dismissing his attempt to fast-track a lawsuit against the computer maker and its board over support for founder Michael Dell's offer to take the company private. This paves the way for a September 12th shareholder vote on Dell's $25 billion buyout offer and on Icahn's counteroffer, which would keep part of the company public.
Disney is turning to some of its best-known characters to boost sales of a new line of video games and interactive toys. The company's Disney Infinity roster of games and figurines will hit stores this Sunday, featuring classic movies and TV show characters like Mickey Mouse and Toy Story's Buzz Lightyear.
AOL is reportedly sending pink slips to as many as 500 workers, nearly half the workforce at its Patch local news website network. The media company said it plans to consolidate or close some Patch sites to cut costs and partner with other media firms in some locations. Now, earlier this week, as you may have heard, AOL's CEO Tim Armstrong took a lot of heat after he was recorded firing Patch's creative director during a meeting on the future of Patch.
Shares of AOL closed slightly lower today, but August has been a sizzling hot month for the company and several other media stocks. Julia Borston breaks down some of the biggest winners and what's driving those shares higher.
Shares of streaming music service Pandora shot as much as 6% higher today, thanks to a Goldman Sachs upgrade that dismissed competition concerns, pointing to the promise in local advertising growth, bringing the stock up 11% for the month.
This company has had 3 quarters in a row of accelerating mobile monetization, and they're starting to crack the biggest cost overhang on the company, which are the content royalty costs.
Pandora doesn't report earnings until Thursday, but several other stocks have gained on better than expected results. LinkedIn is up 12% in August, thanks to earnings that soared past expectations. The stock hitting an all-time high Monday after a Needham analyst upgraded the stock to buy on, quote, unexploited growth opportunities. Groupon benefited from signs that its local mobile strategy is working, but perhaps the biggest factor behind its 8% gains this month is news that interim co-founder Eric Lefkofsky is permanently taking on the CEO role.
We've seen the stocks do really well, in part because they have nicely beaten numbers on the quarter, but really the big picture here is that they have shown a success in migrating the mobile transition.
And it's not just social media stocks bucking the market's downward trend. 2 traditional media stocks are also having a good month. Viacom is up about 7% after reporting a 20% gain in net income and another $2 billion stock buyback, while newly spun off 21st Century Fox is up 7% after an upbeat outlook in its Investor Day presentations. The real loser in August is Zynga, continuing its fall since the end of July when it ditched efforts to pursue gambling in the U.S. and revealed a weak outlook. While Facebook is up just 1% this month, it's up 40% since its better than expected earnings on July 24th. For Nightly Business Report, I'm Julia Borston in Los Angeles.
Another online company getting a boost today, and that leads our Market Focus segment tonight. Trulia, a website real estate company, received positive comments from Goldman Sachs. The analyst there reiterating his buy rating on the stock and setting a price target of $48 a share. The stock rose more than 5% and settled at $46.10. Shares of JCPenney are lower after the retailer came to agreement with its largest shareholder, Bill Ackman, that will allow him to completely part ways from the company. Under the deal, Pershing Square's Ackman can make up to 4 requests to the company to sell his stock, but he has to wait until at least Tuesday, when JCPenney is scheduled to report earnings. Ackman recently ended his public dispute with the retailer by resigning from Penny's board. The stock dropped 3% today and finished at $13.40. And yet another retailer is issuing a profit warning. The latest, Joseph A. Bank, which late yesterday said second quarter results will fall far short of expectations. The men's retailer said its promotional marketing campaign failed to resonate with consumers and led to a decline in sales. The stock down 7% to $41 even.
Different story at Green Mountain Coffee Roasters. The stock getting a lift. The stock will join the NASDAQ 100 index next Thursday, replacing Life Technologies, which was sold to Thermo Fisher. The stock rising 3% to $76.38. It has tripled over the past year. And shares of National Technical Systems soaring today after agreeing to be taken private by Aurora Capital Group. It's a cash deal for almost $300 million that works out to $23 a share. National Technical is a testing and engineering services company. The stock rallied 38% to $22.89.
Well, Susie, our market monitor guest tonight says despite the highs and lows in the market, he is maintaining his 1,700 target on the S&P 500. And here to tell us why is Rich Steinberg, President and Chief Investment Officer of Steinberg Global Asset Management. Why shouldn't I be frightened this week, Rich? It was pretty ugly out there.
Yeah, listen, Tyler, we have to keep it in perspective. The market's had a big run. This was a 2% pullback. I think it feels a little bit more jumpy because investors were getting greedy. They were moving money out of bonds and into stocks because they saw their bonds going down for the first time in 10 plus years. So you have some people that put money into the market and then said, oh, maybe I made a mistake. So this is all part of the process. The market will settle in here. 1,700 would be roughly 15.5 times our $110 target.
All right. Let's turn to some of the viewer questions, Rich. We have Michael from Berkeley, California, wanting to get your views on Salesforce.com. What do you think?
Well, this is a classic stock that you have to differentiate between a great company and a great product and a great stock. Great company, not a great stock, trading at 138 times earnings of this year's earnings. The company has made some pretty aggressive acquisitions that may not pan out. Insiders are selling. It's a stock that really wouldn't fit our criteria.
138 times earnings, a lot has got to go well. Bruce L. owns shares of American Electric Power and wants to know your position on that one, AEP.
AEP is a utility based in Columbus, Ohio, really well-run company. The issue is with the 10-year at over 2.8%, utilities are out of favor. It yields 4.5%, really well-run company. Probably a name you could own, but you got to realize that there's going to be some wind in your face with interest rates. You could buy it at lower levels, but probably not right now.
Let's turn now to some of your own recommendation stocks that you are putting in your portfolios. The first one on the list, National Oil Well Varco, NOV. Why do you like it?
This is a really well-run company. They're in the equipment business for drilling in both oil and natural gas. The stock's trading at under 12 times next year's earnings. They have a great backlog, and we have an $85 target, so it fits our growth at a reasonable price. You're basically being able to buy a growth company at really value prices.
So let's move back to a question on the market. At 1655 today, how close are we to that point where you might be adding to your equity positions if you think we're going to end the year at something in the neighborhood of 1,700, maybe a little higher?
We've had a lot of cash come in with new money, as well as we got defensive as our stocks reach targets. And actually today, specifically in our dividend and our ETF models, we started to nibble at stocks here, Tyler, as an entry point to ease in maybe again at the 1625 level. And again, we think that there's decent valuation support at 1600. We could be in a trading range of 1600 to 1700. It gives us pretty good entry points on names that we want to own here.
So what do you think investors should do, individual investors?
Well, I think it depends on their asset allocation. If you're a bond investor, you have to reduce your risk. The analogy that I would give you is like the old-fashioned Muhammad Ali rope-a-dope. Get in the corner, have cash around, take your punches, and then come out swinging as rates go up to a level where you can use that income to live your lifestyle. For equities, really think about in 2008 and in bad markets how you felt about your overexposure to equities, and just make sure that you're in balance. If you have cash, don't let frightening weeks like this where you're down 2% take you off your game. Have a strategy to put money to work at levels that you think are reasonable. That's what we did today.
Final quick question. One sector that you love, one sector that you loathe right now?
Well, a sector that we don't have enough exposure to right now that I think we're going to love soon will be Europe. Looks like they're just coming out of recession. It's kind of a wait and see. Germany's numbers were good this week. France numbers were good. So we're starting to look at European names again for the first time since 2008. And I think you have to be underweight utilities. Everybody wants to own dividend stocks. In our dividend portfolio, we're way underweight the utility sector. And I think it's an area that you really have to be careful of and wait till yields come your way.
Do you guys own any of the stocks we mentioned? I guess we know you own Oil Well Varco and the financial, but how about any of the others?
We do not own the other two.
All right, Rich.
And I don't own any of them personally.
Fantastic. Rich, thank you for a very helpful conversation. Rich Steinberg of Steinberg Global Asset Management.
And still ahead on Nightly Business Report, blame it on the rain. Many retailers do, using the weather as an excuse for poor results. But this time around, it might be true. But first, let's get a check on how commodities, treasuries, and currencies fared today. It's been a rough week for investors in retailer stocks. The nation's big retailers have been complaining that consumers aren't spending much these days. They also blame the weather. But how much does bad weather really hurt sales or good weather help? Courtney Reagan has the story.
It's been a cool, wet summer for many regions of the country, and that's hitting retailers' bottom lines. Recently, a number of retailers, including Macy's and behemoth Walmart, have cited cooler late spring and early summer weather for crimping sales of warm weather goods, resulting in larger than expected markdowns. Good for consumers looking for a deal, but bad news for stores looking to build profits.
It's certainly harder to sell shorts and swimsuits when shoppers have goosebumps from the cold temperatures outside. But summer is almost over, and the cooler weather is being welcomed by retailers hoping to sell corduroys and sweaters at full price for back to school.
The Weather Channel forecasts the weather this fall will be more typical for the season, a far cry from last year's warm temperatures, an extension of the hottest summer in 110 years. A normal fall will be welcome news for the Gap, Macy's, and Kohl's.
The net benefit is not going to be a direct relation of the weather as much as it is the sentiment change that this cool weather has caused, meaning all of a sudden when we're waking up in the morning and have to put on a sweatshirt and it's early August, that basically then translates into people thinking that they need to start getting ready for back to school.
If it's a little cooler, I'll, start thinking about bringing out winter gear, but try to avoid it for as long as I can.
I could probably use a couple more long sleeve shirts.
I am climate driven, yes.
Not until I'm sitting there freezing cold and I realize I have nothing to wear. So when that happens, I'll probably run to the store and do something.
While kids going back to school hope for a late summer surge, retailers are anxious for the thermometers to drop. The lower the temperatures in the fall, the higher the profit margins for retailers. For Nightly Business Report, I'm Courtney Reagan.
It looks like the race to be the first to come out with a wearable computer device is close to being won. Reports say that South Korea's Samsung will unveil a wristwatch-like smart device in Berlin on September 4th, a few days ahead of an expected new product announcement from Apple on September 10th.
General Motors is recalling nearly 300,000 Chevy Cruze compact cars. The automaker has to fix a power-assisted brake failure on 2011 and 2012 model year Cruzes that have caused some low-speed crashes, but no reported injuries.
And Ford Motors will be sending a whole bunch of checks to owners and lessees of its C-Max hybrid sedans. That's after the EPA said the actual miles per gallon on the car, 9% lower than what Ford claims it to be on its window stickers. Oops. Well, to make amends, checks for $550 to owners and $325 for people who lease C-Max hybrids are being sent out, and Ford will change its claims from 47 miles a gallon down to 43.
And now for car lovers and investors, a look at one of the world's premier auto shows. The annual Concours d'Elegance in Pebble Beach, California, is featuring a stunning array of antique and collectible cars. And with price tags that run in the seven figures, it's the latest sign that vintage cars have become a red-hot investment vehicle. Robert Frank has more.
The stock market may have hit some speed bumps, but the prices for collectible cars are on a tear. Here at Pebble Beach, auction houses are expected to sell more than $300 million worth of cars. That would be an all-time record, topping last year's $265 million, and that's twice the pre-crisis record.
It's been pretty hot. The values have been rising fairly consistently, with certain areas and certain segments having more buoyancy and kind of a little bit more excitement behind them, especially at auction.
More than 100 cars are expected to sell for more than $1 million, and $10 million is the new million when it comes to these top cars.
When people start talking about, $1 million cars, that's pretty easy now for me to understand, as hard as it is to imagine. But now it's $10 million cars and $20 million cars, and there are actually some $50 million cars. And while that was impossible to imagine, I know some people are starting to talk about what's going to be the first $100 million car.
Right now, the wealthy are rushing into hard assets that not only bring in returns, but also have an added bonus.
You buy $300 grand worth of stock and it goes down 3%, you're all upset. So you buy a car. It's more fun.
The car that's expected to fetch the highest price this weekend is a Ferrari NART, estimate $14 to $17 million. But the battle for the top price will be with this car, a 1957 250 GT Berlinetta that could fetch between $9 to $11 million. For Nightly Business Report, I'm Robert Frank, Pebble Beach.
Like cars like that?
Love them.
They're very
I'm
beautiful.
drooling.
They're beautiful,
I would
aren't
love
they?
to test drive some of those Ferraris.
We have a neighbor who has a restored checker cab like you used to see in New York on the streets.
Right.
Beautiful piece of work.
This is a completely different level.
This is a different level of that, but it's a nice set of wheels, I tell you.
That's Nightly Business
And he doesn't
Report.
charge me when he takes me for a ride in it, unlike a cabbie.
Have a great weekend, everyone.
All right, that'll do it for Nightly Business Report for a Friday. I'm Tyler Matheson. Thanks for watching. We'll see you back here on Monday.
Nightly Business Report has been brought to you by sailing through the heart of historic cities and landscapes on a river. You get close to iconic landmarks, to local life, to cultural treasures. Viking River Cruises, exploring the world in comfort.
I'm Susie Garrett with the Nightly Business Report News Brief. Another milestone on Wall Street today, the Dow posting its worst weekly decline in more than a year. All the major stock averages closed lower for the second week in a row on worries about a pullback in consumer spending and a spike in interest rates if the Federal Reserve begins trimming its stimulus measures. Today, the Dow fell 30 points, the Nasdaq down 3, the S&P off by 5 points. Oil rose for the sixth straight session as violent protests in Egypt sparked concerns about supply disruptions. Consumer sentiment fell in August, coming off a 6-year high in July. And new home construction was higher in July, but that's mostly on new apartment buildings, not on more profitable single-family homes, which fell 2%. Be sure to tune in to Nightly Business Report right here on your public television station.